What's up, traders? Matt from the Trade Brigade back on schedule for the weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins that you see listed up above. We'll of course be starting off on the Bitcoin daily time frame as we always do. What do we see from a price action and structural perspective? Certainly the possibility still for a double top. We know that we're not really actioning on that pattern here until we break back down underneath the neckline of the pattern here, around $21,600 per coin, which was also conveniently the top end of the prior balance range from right around in here. So there's still some work to be done before that short setup is on the table. But if we were to breach this area, of course, the target is the bottom end of the range, this support portion from here, here, and here, around $18,600 per coin. Now, why do I bring up the downside first when on the daily time frame we clearly have the possibility for a higher low? There's really two reasons for this. Reason number one is that three back-to-back inverted hammers here would indicate that the sellers are really stepping up and selling all of these rallies that are being staged on an intraday basis. So lack of confidence really from the buyers as displayed by this cluster of three little inverted hammers there. You know, it would be a completely different story if these were all upside down and we had long-tailed bottoming hammers. Of course, we would say the buyers are stepping up, right? Yes, we're going to look for the upside, but it's just simply not the case as of right now. So a lack of confidence from the buyers, big upper wicks there on the daily time frame 3 days in a row isn't really making me feel warm and fuzzy about an upside break. So that's reason one for breakdown. Reason number two is really the weekly time frame chart still. If we look at this, of course, we have a high, lower highs, lower highs, lower highs, and could this possibly be a lower high? Absolutely. We can't rule that out as a possibility here. To neutralize the weekly downtrend, we know that it would require a move into this sort of zone right here, around 28,650 per coin, and we just don't have that as of right now. So for those two reasons, bearish outcomes first here inside of Bitcoin. If we quickly take out the Fibonacci's, I think this will further drive home the point. If we come from the top, ultimately, of this big breakdown of the past two like catastrophic crypto events, right? You'll notice that we're still underneath the 38.2, which keeps us in bear territory. The other sort of perspective that we could add here would be coming in from the most recent leg down, not the entire thing. So from here to here, and just notice that, yeah, we are at the 38.2, but we're not really, closing strong bars around it. An indecisive doji on the last week's session and this week, an even more compressed, indecisive, small-bodied bar, just indicating that, lack of confidence from the buyers, right? If this was going to be a stronger move, I would definitely want to see stronger weekly bars here, and it's just not the case around this 38.2. So to me, the possibility is certainly open for a lower high around these areas, which is why we talked about downside first. Now back to the daily time frame, I do want to at least acknowledge that yes, in the short term, we have the possibility for a higher low. So if this does turn around, so be it. I wouldn't, speculate early on a long, but if we could close a daily bar outside of or above rather that 23,850 per coin, then yeah, maybe there's some room to run through this thin structure back to the sort of breakdown point around 28,650, which as we pointed out would neutralize the weekly trend. So there's still some work to be done before we're feeling even neutral to slightly bullish about this chart. And please, again, if you are trying to time a long here, just be patient, wait for the sort of daily bar confirmation close above this level of resistance that we've been seeing, right? If we can take that out, by all means, right? Higher highs are on the table. Maybe we move through this thin structure fairly quickly. But until that happens, please take into consideration everything else that we've said, especially about these three bars right here and the large upper wicks. Let's move along and talk about Ethereum. What we'll notice here is a completely different picture. So you'll notice, let's go to the weekly first, actually. We'll just do a true top down here. So yes, from here to here, this would have been that equivalent area in Bitcoin where we formed that next lower high. Notice that Ethereum has already neutralized the trend. It's in this general zone where that last breakdown really stemmed from right here. So from that perspective, we're doing a little bit better here inside of Ethereum. We'll stay congruent and take out the fibs from the top all the way down to the bottom. Obviously, we're not yet at this 38.2. So again, it'd be hard to say anything other than in bear territory. That, of course, will hold true. But if we do this, for the fibs from the top of the most recent leg lower to the bottom, notice the strong green-bodied bars through the 38.2, the 50% fib, and even the 61.8. So to me, much better relative strength here inside of Ethereum, and I think it's hard to argue with that just based on the pure objective numbers that we've just pointed out here. So hopefully that makes sense. And on the daily time frame, the pattern looks much better, right? You can clearly see that we have a low, higher low. There's the possibility for a higher low. This is not forming as an inverted hammer. A little little bit of an upper wick. I'll certainly give, the sellers a little credit where credit is due, but it's not nearly as significant as what we just saw in Bitcoin. So to me, watching for this trend line to hold here in the long is probably up and over 1750 on a daily bar close for that rotation into 1920, which is coming from this prior flush point, which then offered rejection and rejection here as well for that big rollover. So the long looking better in Ethereum, 1750 up to 1920. The trend looks much better. Notice the bigger distance between here and the top of the prior balance highs, right? So Ethereum just looks like a better chart. The structure is better. The momentum is better. The weekly chart is better, already neutralizing that trend. This is where I would be looking for longs instead of in Bitcoin. Now, if we do fail the trend line, I would watch out for a move here. I would not short for that move from here to here. And instead, I would say, okay, if we then fail around this 1500 or 1483, if you want to be precise, then we can, of course, come in for the back test of the top of the range here. That would be the short setup. So trading for this range, not the trend line break into that area of support for all of the reasons we've just discussed. Again, when there's relative strength, you want to wait for the confirmation on the short side. When there's relative weakness, you want to wait for the confirmation on the bull side, which is kind of exactly what we've just outlined in the differences between Bitcoin and Ethereum. Let's continue along and get into Binance Coin now. Obviously, big relative strength here as well. This chart perhaps looks the best out of the three we've seen so far, obviously neutralizing that weekly trend by making the equal high here on the weekly time frame. But we're starting to put in an inverted hammer. Does that strike me as the end of the world, though? I mean, we talked about inverted hammers on the Bitcoin chart. No, absolutely not. Notice how we've made a new higher high from here to here, whereas Bitcoin made, sort of lackluster lower highs, is drifting lower on the pullback. This, to me, starts the opportunity for the next higher low pullback, right? The trend is clearly to the upside. We have lows, higher lows, higher lows, higher lows, higher lows. We can afford another higher low pullback now that we've made a new higher high from here to here. So not the end of the world. Now, where would the ideal higher low pullback come? Let's take out the fibs. We've been using these quite a bit in today's video, so let's just keep it up. In a rainbows and butterflies world, obviously it respects these prior highs, which are also roughly aligned with the 38.2. That's 303.50 inside of Binance Coin. So consolidation there puts in a bull flag, then looking for continuation eventually. If a deeper pullback comes, I would want to see this hold around the 61.8 Fibonacci, which is 292.50 inside of Binance Coin. The reason that is because anything lower really puts in, or the beginning look, so remember that number, I'm going to clean up the fibs, right? If we were to do something like this and pull back deeper into this area, notice how, if we do something like that, what did I just draw in, right? A head and shoulders pattern, which of course is bearish, and, tying that in with the weekly overhead supply here coming into a resistance point, a head and shoulders on the daily time frame would not be ideal at this general area. So you want to see this level, that 290 area, definitely hold up for a higher low on this particular pullback to remain optimally bullish. Now, if we go on up to that weekly time frame chart, because we've been doing this recently, one thing I want to point out is, again, the pullback here does not strike me as being the end of the world. And another reason for that is because we've seen a 100% retracement of this move right here. And generally speaking, you first get a pullback higher low and then continuation. On the daily time frame for quick scalps and day trades and really remaining optimally bullish, we already covered those levels. But for swing traders, people who are really looking at larger structure for, multi-week, multi-month holds, it would not be the end of the world. The pullback, form a higher low at the trend line and this breakout level, that's at 268 level, and then do something like this on the weekly time frame chart. So this move would not be ideal for day traders, which is what we just discussed on the daily time frame, but on the weekly, certainly there's some leeway, if you will, for a higher low pullback, which could ultimately come down to 268. Let's continue along. ADA is up next. This is Cardano. Weekly chart's horrible. We're not even going to waste our time on that. And we're not even really going to waste too much time here on the daily time frame chart. Nothing happening in this name. All social media hype has died out. I don't see it being tweeted anymore. It's never on CoinMarketCap trending coins. It's sideways in this range. It's doing absolutely nothing. And at this price point, there's no sense in really scalping it for fractions of a penny in either direction. I think, the next actionable thing here inside of Cardano is obviously the break of 55 cents gets you to 65 cents. That might be worth trading for a 10-cent range there, or some move under 44 to see where the next leg lower ultimately takes us and see if we can get some sort of bounce off of a technical support. Being in the midpoint of this range, it's just not worth speculating yet one way versus another. So patience is the play in Cardano. There's absolutely nothing to do here until one of those two levels that we've just identified breaches. And also remember, like if you position early, if you're like dead set on the idea that this is either going to go higher or lower, let's just for the sake of example say we think it's going to go higher and it actually goes lower here from 50 cents down to 40 cents. I mean, goodness, from a percentage standpoint, that's obviously not a very good trade. And on something that's priced at this price point, it can feel oftentimes. So this is more of a psychological rant, not so much rant, but tidbit of information, if you will. Something at this price point, it can be very easy to just say, oh, I'm going to buy a ton of it because it's so cheap. It's 50 cents, right? You could buy, I don't know, hundreds of thousands, whatever. Maybe not hundreds of thousands. That would be a $50,000 position, obviously. But you get the gist, right? It's fairly easy to sort of size up in something that is quote unquote cheap because it doesn't feel like you're spending a lot of money when in reality, the percentage moves are really, really dramatic. So just be mindful of that if you are sort of trying to position early for something inside of Cardano. Just don't let the size get out of control would be the one thing that I say about a chart like this. Next up, we've got Solana. This one's a little bit better, but not really from Cardano. And the reason I say that is because we're still just stuck sideways in this area here. It's definitely more bearish than all of the charts we've seen so far. And the reason for that is if you look at this to this, I mean, obviously that's a difference of a lower high. We're already much closer to the neckline of the double top, if this is the pattern that's going to unfold here. And we're at the support trend line off of a lower high. Usually you buy the trend line on the first higher high. And now that we have a lower high, obviously it's not as attractive as a buy here. Now, we're not breaching immediately. You'll notice that we have a green bodied bar here. It's not like we're crashing and burning, but I wouldn't be as confident in a long here off of 38, we'll call it for round number's sake, as I would if this produced a higher high. So instead, what I would say is, all right, a lower high reattempt here opens up the door for shorts to quote unquote fill up the triangle. This is the triangle that we're referencing. It's a nice 90-degree triangle. You get the gist. The target is here at 31.77. That's the downside in Solana, and this is probably where you want to watch for relative weakness just because, again, it has already produced a lower high and it's coming into this area. It's very close to the neckline already. Really kind of a sloppy chart, if you will. This kind of area in here, it's lower, it's higher, it's trying to make all these different moves in here. It's just not as clean, right? If you're looking for longs, I think it's quite an obvious choice that we've covered on today's video. You want to be in Ethereum or Binance Coin. Last but not least, we've got MATIC USD, and this might also be a place where you start looking for some longs simply based on the relative strength, right? If you think about this as a bull pennant sort of pattern, obviously we've got the lows, higher lows, everything's all good. We're really waiting for a break of $1. Not only is $1 a psychological area of resistance, but you can clearly see it's the double top from here and also prior support from right around in this area. So if we can breach $1, we know, and we've talked about in the past, how there's a 17% move available into $1.17. Nice easy math there into this prior high. So that's the trade to watch out for inside of MATIC. I would not get overly convicted inside of this box that we've just drawn. We're in the midpoint of this range. I don't really think you have an edge here. If you've been watching the channel for any period of time, you know that your edge exists at the top end of the edge or the bottom for a breakout or mean reversion, but or rather I should say, the exact same thing is true, but opposite at the bottom for mean reversion or a breakdown. In the midpoint, 50-50 coin toss, right? So be patient, wait for the break of $1, $1.17 is your target. If we do take out the lows here, I probably wouldn't short it. I would watch and see what the reaction is at the trend line. If it holds up there, fine, maybe it's still on the table for longs, but if this breaks, that's where we can open up and probably make the move into 60 cents, this prior double top and breakout area from here. A retest of that would strike me as a reasonable possibility if we take out 74 cents on the downside. That's what I've got for you in today's crypto analysis. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a thumbs up. Don't forget that the weekly watch list video will come out as scheduled this weekend, either Saturday or Sunday. I'm not entirely sure just yet. And we've still got some shirts available for order if you're interested. First link down below in the description or just tradebrigade.co/t-shirts. I believe every single size is still in stock, but we've got a limited quantity left. I believe it's something like 15, 18 shirts total. So if you're interested, check it out. If not, no big deal. I wish all of you a green trading week.